founder and CEO of Galileo. Galileo is a company that provides infrastructure capabilities to our clients, who tend to be either financial services companies or fintech companies. We power a significant number. By one recent measure, 95% of all digital banking in North America is powered by Galileo, and many of the leading fintech companies globally. So that's Galileo.
Great. And so well, let's talk about it. I mean, SoFi recently acquired Galileo earlier this year. Can we talk about your role in sort of the new entity?
Yeah, absolutely. SoFi is a great company. They've done a great job creating a membership-based distribution of fintech-related products, and they've raised a lot of money, been very successful, but they deliver that in a consumer sort of package, and largely based around lending. Galileo's been very dominant in banking and payments, and so the intent of bringing these two companies together is, many of our clients have got lending products in their roadmaps, and we're wanting to commercialize and productize some of those lending products around our enterprise-grade APIs and make those available to the broader fintech ecosystem. So that was the original thesis of bringing the two companies together, and so far it's gone extremely well.
You know, it's interesting, Clay, as I've heard you speak in the aftermath of the merger, the value of the two entities coming together becomes clearer and more potent to me as I'm hearing you describe it. What, if anything, does this merger portend for embedded payments in general?
I think it's great. I'm really excited about the combination of the companies, but more exciting is the opportunity around your conference today and the topic that you're speaking to, the notion of embedded finance, which is the ability to be able to embed banking-like products into environments, access those products and make them available as additional services out to consumers in places where you wouldn't necessarily expect to find a financial application. But when you begin to look under the covers, it's a perfectly natural thing. It's the elimination of this friction that we have, largely due to legacy-based constraints in our banking system, and the way that we've kind of grown accustomed to interacting with our money. I wake up, I go to work, I eventually get paid, and that money is sitting someplace, but there's lots and lots of friction in the ways that I use it. And embedded finance begins to break that down and eliminate that. So it's to me, it's all around innovation, and we're just now at the beginning, in my mind.
That's awesome. And what do you think it means, the combined entity, in terms of competitive dynamics in the marketplace?
I think it's really good because Galileo has the infrastructure capabilities today, and now additionally with the combination of SoFi to be able to power many of these embedded finance applications. So I like where Galileo is positioned. If you add one more dimension to this, which is the ability to be able to do this across multiple geographic areas, this becomes really important and a real differentiator for Galileo. We, of course, are dominant in North America, so US and Canada, but recently certified and operating in Mexico, also currently certifying in Colombia and Brazil and additional markets in LATAM, as well as the UK and APAC, including Australia and Singapore. So the ability to be able to do this across multiple geographies and banking regulatory environments is an important part of this notion of embedded finance.
Absolutely. Navigating that globally is a huge challenge. I understand that. One of the interesting, I was excited to hear you speak today because I know one of the topics you wanted to tackle was sort of the future of where things are headed. Where do you think embedded payments are headed, and where are we, I guess, in the timeline in that race? To borrow from baseball, what inning are we in?
That's a good question. I honestly think that, if you look back over the evolution, which is beyond credit, beyond debit, and then really to everything else in the form of payments, and then the emergence of what has been, sort of deemed as fintech, and I refer to that as fintech 1.0. From a baseball analogy, I don't know what inning I would describe we're in. In my view, we're at least 5 to 7 years into that progression. But I honestly believe that as we look forward here, that we're really at just the beginning. It wouldn't surprise me to see us going through a 20-year emergence of innovation in the way that we interact with our money. So if you put that into perspective, maybe we're in the third inning or the second inning here.
Okay, it's early, regardless.
It's early.
Yeah.
The final score hasn't been tallied.
Right, and we don't know how many innings it's going to go. So.
Right.
Well, I think one of the interesting things that Galileo brings is your deal flow, because you're powering so much of the marketplace, both with large incumbents and smaller companies. I think you have a really interesting view of use cases. And I'm kind of curious, at Tearsheet, we talk about embedded finances. We have this tagline of being able to bank with the brands that you love, and it could be any brand, non-financial or whatever. What are you really seeing on your end on the demand side? Who's entering this marketplace right now?
When I think about embedded finance, it's really around innovation. And so the limitations are really the human spirit and creativity. And that's what's exciting to me, because it's really not, to me, it's not about what are the current fintech leaders doing, or what are the current large technology companies, or even the large incumbent banks, what are they doing? It's not really about that. To me, what is more exciting, we just finished we did a joint hackathon for another large conference this last week. I won't name the name, but large prestigious conference, and we were powering much of that. We had 500 entrants. Wow. And the ideas that came about just in this sort of 3-week competition were amazing. And so it's not the kind of thing that you and I can sit and, if we were drawing a whiteboard, imagine 500 different concepts on ways to use, financial services to embed these types of capabilities. But that's indeed what happened. So as I look at the spectrum here, one of the things that most excites me is a product that Galileo has recently introduced, called Galileo Instant, which has the ability to reduce the friction that is required to get into and conceptualize one of these innovative ideas. And so now, literally in a matter of minutes, we've done it in as fast as 10 minutes. You can come to Galileo's site, enroll in Galileo Instant. You're presented with a dashboard, and literally within a matter of minutes, you can be doing what used to take months, many months, somewhere between 6 and 18 months to do. And that is creating an environment where these innovative ideas can really begin to germinate and be fostered quickly.
I guess going back to the non-financial brand question, is there awareness among non-FIs that they can, through working with an embedded platform like Galileo, enter the market with a banking product?
I think that is really still fairly nascent. I think we've got a lot to do in order to bring that awareness to the marketplace. And by a lot to do, I mean as an industry. We're doing some. You and I know about it, and a number of others in our industry. But if we're talking about non-financial institutions bringing these capabilities about, then I think there's still quite a bit of education to do.
I guess taking that a step further, I guess what will motivate them to actually take that next step, either to learn more or to pilot some projects?
Yeah, some of the creative pioneers are beginning to make that journey, and as those things come about in a mass sort of way, so they're brought to light through press and other activities. then I expect that educational journey will be underway, and that's happening already. It's already happening.
And I guess another corollary, you mentioned the new instant product, which enables brands to get up and moving quite quickly. What role does speed play for these players in terms of thinking about launching banking products?
I think it's really important because if you're going to go through an iterative process, this notion of iteration, it's important to be able to do that at low cost and very, very quickly, so that you can learn from your ideas and improve them. So I think that it plays a key role in the way that I think about innovation, which is you want to go out, try something, get some learnings, and go back and try it again. And having a technological partner, provider that can deliver those services is really key to that learning.
Do you have public examples that you can cite of brands like that moving into the space?
Well, we've had, that's a very good question. We've got thousands of them now. I can give one example. There was a company that came to us. They'd raised $50,000. They enrolled in Galileo Instant. They wanted to bring a product that served the disabled. And this is a company that even just before Galileo Instant launched, that we would have not been able to serve them in our enterprise offering. It would have been disqualifying, so to speak. But it's a product that ought to be brought about, this company is now, we did a little bit of a showcase on them, and they're now, I see them, all over, as a notable company speaking at various conferences. So, this is one of the success stories, early success stories in Galileo Instant. The company is Purple, and you may have heard about them, but anyway, that's one example, but there are many.
Interesting. I want to just pause for a second, Clay, and mention to the audience, we will have a few minutes at the end of Clay's session. If you want to have if you have questions to ask to Clay, you can hit the button in the Zoom webinar panel, the Q&A button. You can send a question through that panel, and hopefully we can get to those questions. And I'd love to bring you on screen so you can ask your question directly to Clay. I see there are a couple of questions there already. I want to move, Clay, into, I guess, the value chain and how embedded payments impact the different players there. So we've got traditional FIs, we've got fintechs, you've got the retailers, and new brands moving into the space. So maybe you could talk about sort of that whole environment.
As embedded finance begins to become more prevalent, it will alter the landscape. As we think about traditional banking, digital banking, of course, the rise of the neobanks or challenger banks has been just one example, but it's very early. I wouldn't describe necessarily as successful as someone like Chime and many of the others have been. I wouldn't necessarily describe that as the full challenge to this reimagination of the way we interact with our money. So I think that there's going to continue to be challenges presented to traditional banking. I think that the early leaders in what I would call this Fintech 1.0 we'll begin to see consolidation there and some fallout, but we're going to see the rise of these innovative challengers. We saw this in the internet with initially the protocols that enabled and the network that enabled it, then the rise of the World Wide Web as sort of a phase one, and then ultimately kind of many of the applications that came along later, such as social media and ultimately the applications that we all use on our smartphones as examples. That innovative environment of the internet, which gave rise to over 1 million let's say, applications in an ecosystem like the Apple Store, Apple App Store, is really what I think we're going to see in the fintech embedded space. So we'll see new winners that haven't even been imagined yet, and I can imagine that these are things that will come about in areas that we're not really even thinking about right now. So could that be in agriculture or education or commercial banking? We've seen a lot of change in consumer banking, but what about commercial banking? How about in shipping? All of these different areas where money is being used as a means to accomplish something have a lot of opportunity for optimization through embedded finance.
I like that vision. I just want to pull on that a little bit more. What about incumbent banks? What role do they play in sort of this future vision that you have?
I don't think incumbent banks are going away at all, and definitely not anytime soon. The incumbent bank, especially the larger incumbent banks, they play a key role, and in my belief, they will continue to do so. But it's going to create pressure and requirements for change, and we're seeing that. Some of the incumbent banks are beginning to respond to the ways that they interact with their consumer base, and I expect that to continue.
Do you mean them launching sort of sidecar banks with new brands?
It could be that, but it could be just sort of thinking from the inside out of the bank about the technology that's being utilized, the way in which you address these consumer needs, staying focused on the consumer experience, responding to these various pressures that come about in the marketplace. We're seeing that. Galileo's been contacted by several of the very large incumbent banks as they begin to reimagine their own internal processes.
Interesting. I want to switch to another question, and this is more specific to the payments ecosystem. So do embedded payments change the historic roles of the payment players like issuers and acquirers, the networks, and sponsoring banks?
I absolutely believe that this is one of the most important transformations that will occur. These definitions that we have today, such as issuer and acquirer, cardholder and merchant, I think that those break down in an embedded finance world. They become quite a bit more blurry. One of the examples of embedded finance is this notion of wallets on the mobile device. And where is that role? Well, we can apply that to the traditional roles of issuing and acquiring, but as you begin to look at that experience and reimagine the experience, for example, of a consumer walking into a large retailer wanting to buy a television for the Super Bowl, I detect that they're in the store. I detect that they have the mobile device. I present them with an offer. They go secure the merchandise. They're presented with a credit offer to handle it. They check out on their mobile device. I mean, there's nothing about any of that experience that is traditional. What role was the merchant playing? What role is the quote unquote issuer playing? Or were they one and the same in that transaction? That's all to be yet determined. And I think it begins to break down pretty significantly. We're seeing that already with marketplace type applications and gig economy applications of these services.
And I guess I just want to wrangle traditional banks' roles back into this discussion. Where do you see that leaving the traditional banks again?
Well, traditional banks are, as I say, are going to continue to play a role. One, because they're a regulated entity, and two, they're licensed to perform many of these services at large scale. So, whether you're talking about lending or taking deposits or even payments, They will play a role, and they'll play an important role when you're talking about these types of services at very large scale.
And Clay, I want to now pivot to, I guess, some more personal questions. I'm sure you're comfortable with that. Man, you were doing this, 20 years ago, right? Galileo started 20 years ago, and we didn't even have the terminology fintech back then. You had a major exit beginning this year to SoFi, over $1 billion. I don't know, if I were you, I'd be on a beach somewhere during COVID. But what motivates you to get up in the morning? What motivates you to keep driving, to keep growing Galileo at this point?
Well, right now it's that adrenaline, the excitement that we were talking about earlier about which inning are we in. I think there's still a lot of innovating that is yet to be had, and I enjoy that as part of the process. So I'm excited about where we're headed, both Galileo and the industry, and I'm excited about my personal role in all of that. So not looking to necessarily change that.
And moving our perspective from looking in retrospective to looking forward, what do you see next for fintech? Where do you see all this heading? I know you've alluded to some of that in some of your questions, but I guess given your vantage point, which I think is a really powerful one within the industry, like what do you see coming down the pike?
Well, I think it's more of what we've seen over, say, the last 2 to 3 years. There's been a real acceleration in the last 2 to 3 years of fintech, and as these innovative services begin to come to market, that acceleration will continue and it will increase. I'm reminded of I was talking a little bit about innovation earlier. I'm reminded of an experience where the founder and CEO of Chime woke up, talked to his wife, said that, hey, I want to go start this thing, got on an airplane, flew to Salt Lake City. We met at a cafe. And I've seen that, grow and blossom to a very, very large, successful, and mature company at this point. And when you play that out now across thousands or tens of thousands or possibly more, as you take in other geographic areas, you can see this same story playing out in explosive sorts of ways, and that's what's exciting to watch. And yeah, it's definitely happening right now.
That sounds wild. We have a couple questions. I'm going to bring Shuman on here.
Hi, Shuman Bhattacharya, writer and editor for Tearsheet. So Clay, nice to hear you again. I'm interested in hearing we hear about Galileo powering direct-to-consumer fintech companies. Do you foresee Galileo playing a bigger role in the machinery of B2B payments? And I'd just like your thoughts on the evolution of that space more generally. Thanks.
Good question.
Shuman, good to see you again. Thanks for the question. Yeah, we've been very successful in direct to consumer, but we also play an important role in B2B payments today. We've got a number of very successful B2B constituents and clients that power a large segment of virtual payments. So these are B2B providers that are actually enabling B2B payments, and I expect that will continue. We've had considerable success in that, and I don't see that slowing down at all.
Do you see yourself sort of competing with some of the banks as they work to help businesses simplify transaction flows?
Well, I would hope that we're partnering with banks more than competing with them. That's the way that that Galileo is successful, is in enabling our partnerships. And so my goal would be to work with banks, large and small, and across various geographies to enable those partnerships.
Great, thank you.
Good to see you again.
Likewise.
Another question came through, Clay, about, I guess, the product portfolio during a specific time like the pandemic, right? There's spending patterns have changed. There's also excess liquidity on the consumer side. How reactive is Galileo to coming out with new products and solutions for, I guess, the macroeconomic environment?
Yeah. I would say that the pandemic was quite surprising and shocking, I would say, to the financial ecosystem. And so, what was important was to have already had much of what was needed to respond to that in place. And fortunately, Galileo was in a good position to be able to do that, as we've experienced really dramatic growth through our second and third quarters of this year. And we're seeing that continue into the fourth quarter. And I would expect to see that continue into at least 2 to 3 quarters of 2021, where there's been a real dramatic shift towards digital banking, contactless payments, and these types of technologies. Galileo has been powering for years. So as you look at those responses, those business responses to the pandemic, which I would say caught much of the economy by surprise, you think about a company like Amazon being able to respond, for example, to the pandemic. Well, Amazon took years to build. If in March, Jeff Bezos got a call and said, "Hey, could you build out this tremendous company? It's only going to take you, 25 years and $1 trillion. It's going to take more than the duration of the pandemic in order to do that." So, companies like DoorDash and these other types of gig economy tech companies that really have served in the time of need have needed to have already done some preparation work. Galileo has been very responsive in terms of new products and innovation during the pandemic. And we've been able to work very successfully across the entire company in a work from home environment to serve the surging demands of our clients. But I think that we were responding to an important need as the pandemic came about.
Clay, as usual, a pleasure to talk to you. Thanks for sharing some insights about the market and Galileo, and thanks for joining us at the Embedded Conference.
Thanks for having me today, Zach. Good to see you again. Thanks so much.